Hey, good afternoon. Trader Tim here from eMoneyMind doing a Monday market analysis video. I'll also do a little bit of a trade recap since I was not able to do a video last week. Today is the 23rd of August, 2021. Friday we had options expiration, and then going into this week, seeing as we've bounced off of this trend line yet again, it would be highly expected that we would make it, and this is my thought coming into the week, highly expected that we would go into new highs. Seeing the gap down on Thursday and then rallying and closing, the bullish candle, and then following that up Friday, um, you know, every time we just have, this is really our longest pullback we've had in since the middle of July. We had a 4-day pullback, and this is sort of a 4-day pullback. It's only like 3 days, and then this fourth day we rallied and closed above the prior day's close. So these pullbacks are very short-lived. We've been talking about basically buying every single dip. There's so much money being pumped into the markets. There's so much fear of missing out, and there's so much just money and extra money in people's pockets that they want to put it somewhere. So with this kind of situation, when you come down to a trend line and then you are rallying really hard, especially like today with the gap up at the open near highs, you don't always get a lot of opportunities to get long. So today was a super gift to have such a opportunity near the open to draw up a 50% retracement and actually get a pullback to or close to the 50% with an entry. So I wanted to go through some of today's setups, but before I do, I wanted to go back to last week just because I didn't get a chance to recap those. So Wednesday afternoon, I had drawn up, or I guess Thursday morning, but going from Wednesday's high to Thursday's low, drew up a short here. And just going through my notes, seems like a long time ago now. Let me back up on my 512 tick chart so we can get those side by side. So at 647, we had a high tick. So that is here. So we had a high tick line up with highs. And so, I was looking at that as a short, as drawing up a nice little short here, because this 50% retracement line here is this 50% retracement from highs, or from the swing high rather, down to the swing low. So at the time, you're looking at a strong possibility of getting a retracement and a little bit of a top when you have a high tick on the nicey tick that lines up near a larger resistance level. But we had a nice little double top too. If I zoom in, you can see it. But we didn't quite get a short. If I flip to the regular candlestick charts, you can see we didn't quite bounce into a 50%. And by the time we got down and bounced, we had touched the opposing long. So that means that this drawing as a short is no good because we cleanly bounced off of the long. And so even though there's a high tick at highs, I choose to pass on these as shorts because we bounced cleanly off of in this case, the opposing long. And then at 7 o'clock, this is Pacific time here, there was no short. Let me because we didn't really break the swing low. So that was this guy here. So you notice we're making higher lows, higher lows, higher lows. I don't even really have to draw it, but you can see an uptrend line like this, just visually. Okay, higher lows all the way up. We did not break a swing low here. So if you look closely, see this red candle? The candle below it, yes, we dipped below its low, but see how that candle's high did not break the high candle? So what I'm considering is this candle from low to high. We need to break above that candle's high before breaking that candle's low. So when we this is basically a retest of highs and then another retest of highs. And granted, these are really, really small. This is 512 tick chart, so it's pretty granular. But even though this candle broke the prior candle's low, I'm considering this big body candle to be the one that we would need to break above it. Otherwise, we're just inside of this candle for now. So all of these bars are inside the big body candle. So you can basically think of it as a bull flag. We have a pole, this candle, and then all of these candles are inside of it. So I did not like these two red bars as a swing low break. Thus, I did not take this guy here as a short. I was really looking for this to be the swing low break. So see how we make, here's the candle's high, the next candle's high, the next candle's high, and then this red one breaks the prior candle's low, which is sticking up above the prior candle's high. So that's a little bit on the advanced side and getting real granular and looking at these candles, but it does help me stay out some setups. I mean, this one would have come down, at least got you a free trade because it broke the swing low, and so you could have just moved your stop to break even, but it really didn't get any more than that. So that was all that I had in my notes from Thursday. And then Friday we had options expiration. I had a put position on going into, let's see, at the close on Friday of the week prior. And then I carried that through to Wednesday. I actually closed it out Wednesday at the close, so I didn't catch the entire move down. Would have been a little more profitable if I was able to hold it to Thursday into the open, but I just decided with such a bearish red candle and strong momentum, or like a strong close to the downside, that I would capitalize on that spike in volatility and cash in where I could. So that was the 18th, which is here. So we had this big jump in volatility. Like I said, Thursday, we did go a little bit higher. They would have been worth a little bit more at the open, but then right away we were off and ripping and moving higher. So I'm not really concerned about catching the high to the low, or vice versa, catching the absolute low to the absolute high. I just want to catch a meat of the move and be comfortable taking a chunk out. And so long as my reward to risk is favorable, I'm not really concerned about catching every cent of the move. So let's see, puts Friday. Oh, another thing about Friday, when we're Thursday, big body, green candle, moving strongly to the upside. When we open on Friday and it's starting to look really strong again, you kind of just have to get in where you can. And sometimes that means just buying a pullback, like without getting a 5-minute pullback. So if I drew, here's Friday. Let me get rid of this old drawing here. So if I drew a 50% retracement on the 5-minute here, notice, well, we didn't make a full pullback. But the context of the daily chart and where we're at in the trend, knowing that, okay, we got our bounce off the trend line, now we're starting to rip higher, you kind of just have to come in on the 512 tick chart, and if you want to get into the trend, you just kind of have to buy up a pullback on the 512 because you're probably not going to get one on the 5-minute. And that's why I say a day like today, this morning, that we'll look at here in a second, was really a gift because we did pull back on the 5-minute, whereas Friday we really did not later in the morning. So going to this morning, gap up, and we're near highs. This gray line up here is all-time highs. This other gray line in here was the top of the 30-minute range. And so let me get my 512 over there. Okay, so we zoom into this morning. We had a pullback here on the 5-minute chart. We gap up, we move 3 bars up, a little bit of a reversal candle, but we're so strong and so near all-time highs, and the trend is so strong, really didn't concern me too much. I mean, it didn't even close red. Here's that same 5-minute drawing on the 512 tick chart here. We came a couple ticks away, which I'm fine with. I was not even expecting us to get this close. So then what do I want to do? Well, I want to draw the opposing short just to make sure we don't stop at it. Well, what do you know? We did. We stopped at the short. We rolled over a little bit. Then we bounced, broke the 61.8 by a tick, rolled over again, and then we broke through convincingly by 2 ticks. And it's that point where I can draw from using the low point. I'm not drawing from the higher low. I'm taking from the low that's nearest the larger support level on the 5-minute. So grabbing from there to here, traded in a little bit, but only a couple ticks, plenty of room with the 2-point stop. And then we were off and running. And then from there, so the 63.50 was the long setup, and then we were on our way to new highs. So just trailing the next, you can draw up the next retracement like this and put your stop below that 61.8. And then when you make another swing high, you can just start trailing the swing lows. You can, when you get going like more parabolic, more straight up, you can draw what's called an extension. So instead of drawing a traditional retracement, which is low, grabbing a swing low, to a swing high for a long, you can draw from a swing high to a swing high and carry that up. And so see how my 61.8 is higher than if I drew a swing low to swing high? And so if you're trailing your stop, instead of being below this 67, you're up here below the 69. So by trailing that way, you'd still tighten your stop, and you would have been able to stay in on this little dip below the swing low. Whereas if you just trailed the swing lows here, you're going to be taken out below this guy at 70, 44.70, which, I mean, a 63.50 up to a 70 is 6 points, 6.5 points. So that's a great trade. We talk about not worrying about catching the entire move. You just want to catch the meat or a piece of the move. So don't feel bad if you get taken out. I mean, it does happen to me, time to time, where you get these little dips and I get taken out of the trade, and then it keeps going. You really can't kick yourself for that. But notice how we were above the top of the first 30-minute range. See how we broke above it and we ripped right through it? That was another really strong sign that we're going to be trending higher. We had this, tap at the top of the first 30-minute range, this little double top here, but then just boom, we're right through it. We didn't spend any time. And we did not have a high ticket highs. There was a high tick here at 641, this guy, and our high price was 640. So we made a new high price, and then we made a new high tick. That tick divergence is also conducive for continuing the uptrend. And then if something like this happens where you get taken out, and so your stop was hit, but you don't want to be taken out, you want to get back in, I mean, you can use just that swing low to the next swing high and re-enter, especially if you've already locked in profit on the trade. But you don't have to. Like I said, you don't have to catch the entire move. Focusing on, the risk side is more important than trying to get every cent out of a trade. The other thing you could do when we came up here and broke the all-time highs is take that 50% retracement from the swing low to the swing high. And again, not a huge move, but 77 up to 80. That's a decent little move for at least 3 points. And so when the market's trending strongly, even if you're not catching the trend from start to finish, just catching some of these moves on the 512, trailing your stop, locking in the gain, you can rack up a lot of points just by grabbing 3, 4, 5 points at a time. Um, and then that brought us to that hour and a half mark, which is when I usually like to call it quits for the day because look at the next 2 hours or so over what I would consider the lunchtime. This is Pacific time frame on the bottom, so your Eastern time is 3 hours ahead of that. So this is really kind of the lunchtime session or the late morning, and just a lot more sideways action that's harder to trade with not as much follow through. So that's how today unfolded, and I think that's all of my notes. One last thing I just wanted to comment on is that there's this talk of like, oh, the market can't keep going higher, the real estate market can't keep going like this, and that's all well and good to say, oh, things have been going strong for a while, they can't keep going that strong forever. Sure, that's true, but it doesn't necessarily mean that every time things are going good, that they have to end with a spectacular market crash. And if you go back and think about, what causes these recessions, what puts people in a pinch where they have to, they can't make their mortgage payments, they have to sell their house, they're just selling all their toys and all their stuff for, pennies on the dollar of what it's worth. They're dumping their stock because they need to cash in to gain access to that capital. What causes those kinds of intense recessions are job losses. And so if there's not a super threat, at least that's, foreseen, then if there's jobs available, there's likely a lot less risk for a serious recession. It doesn't mean that stocks might slow down their uptrending pace, or the real estate market might see some more supply and home prices don't continue going berserk. But if you think about all the recessions and depressions out there, it's these events that cause major job loss. And so those types of, if you think about, even though we're talking intraday technical trading and some swing trades and longer term money management, but the primary stuff of what we're talking about in these videos is all about intraday ES kind of trading. It is helpful to just kind of pull back and think bigger picture, think globally, think macroeconomics, and that can help when you get in these situations where it's like, oh gosh, the market is making another run for new highs. It can give you a little more confidence to be able to buy within the trend, but just not the low for the trend, not at the lowest point of the day, or not at a 5-minute 50% pullback. So that larger context, knowing that, okay, here is our trend line, this is the third day that we've been rallying off of that trend line, and we have a projected target just using a basic 50% retracement that's up here in the 45, 36 area. Even if you just want to say it's 4,500, just a big round number, that should help give you confidence to pull the trigger when you're buying a retracement, when the morning chart might look like this and you are sitting up here. And you're looking at the chart saying, wow, I really should have gotten long at the low of the day. If I would have just known that was the low of the day, I should have gotten long. Well, that's not realistic. Drawing up a 5-minute setup that's bigger and being able to take a 512 setup off of that is great, but it doesn't always happen that perfectly like we had today. And so sometimes you just have to be able to, number one, identify the trend, and then number two, have the cojones to just get in the trade and get in the trend, and knowing that, okay, the market's really strong right now and we're rallying off of a recent trend line touch, and we have a target that's still 100 points above us, we are good to go. So if you have questions, you can drop them in the comments below. For those that are VIP members, you can also comment and share charts and chat in the new Discord room. And you can join the live trading session on Tuesday mornings over at eminimind.com/VIP. So thanks everyone and have a great week of trading.